As of 11:32 a.m. GMT-5 on December 23, 2025, Ondas Holdings Inc., trading under the ticker ONDS on the NASDAQ, is priced at $9.14 per share. This represents a minor intraday dip of $0.12 or 1.35% from the opening bells. While the sea of red on the screen might suggest a typical consolidation day for a mid-cap tech play, the reality behind the curtains is that Ondas is currently in the middle of a massive fundamental shift that most of the retail market has not yet fully digested. The expectation for a company like Ondas, which has seen its share price skyrocket from under $1 to over $9 in just over a year, is that it must be an overextended bubble ready to pop. The reality, however, is that the company just successfully outcompeted some of the largest defense contractors in the world for a strategic government border protection contract that could fundamentally rewrite their balance sheet for the next decade. The curiosity loop you need to pay attention to right now is the massive divergence between the company's small $3.4 billion market cap and the sheer scale of the projects they are now leading. When you look at popular stocks like Nvidia stock or Apple stock, the growth is often baked into the price. With Ondas, we are seeing a David versus Goliath story, where the smaller player is winning on technical merit alone. Earlier this month, Ondas Autonomous Systems was selected as the prime contractor for a multi-year program involving thousands of drones and AI-driven swarm operations. This isn't just a pilot program, it is a full-scale deployment for border security. The stock's current price of $9.14 doesn't yet account for the fact that the initial purchase orders are expected to hit in January 2026, which is just a few weeks away. While many are busy self-investing in the same 5 or 6 tech giants, the smart money has been quietly accumulating ONDS. Common ground in the market is that drone technology is too crowded and that regulations will stifle growth. This is the narrative you'll find on many generic investing sites. The contrarian reality is that Ondas has a massive lead in regulatory approvals. Their American Robotics and Airobotics units were the first to receive FAA approval for automated operations beyond visual line of sight without a human operator on site. This is a technical moat that cannot be easily replicated. When you are using a Fidelity brokerage account or Interactive Brokers trading account, you have to look for companies that possess barrier-to-entry technology. Ondas isn't just making a drone, they are building the drone-in-a-box infrastructure and the mission-critical wireless networks that allow these systems to function in remote, high-consequence environments. Let's look at the recent trading volumes and institutional activity, which have been nothing short of extraordinary. On December 19th, just a few sessions ago, the volume hit a staggering 125 million shares, causing an 18% surge in price. This kind of volume doesn't come from retail traders on a Robinhood app. It comes from institutional accumulation. Major players like Vanguard, BlackRock, and even Renaissance Technologies have significantly increased their stakes in the most recent quarter. Institutional ownership has jumped nearly 97% quarter over quarter. When you see names like Jane Street and Citadel increasing their positions by triple-digit percentages, the expectation that this is just a meme play falls apart. The reality is that the institutions are preparing for a massive revenue ramp-up in 2026. Macroeconomic pressures are weighing on the broader market today, and ONDS is not immune to the general risk-off sentiment affecting high-growth tech. However, the sector momentum for counter-drone and autonomous surveillance is currently detached from the general economy. Whether the GDP grows or shrinks, the demand for security at European airports and U.S. borders is only going up. Ondas recently secured another $8.2 million order for its Iron Drone radar system to protect a major European airport, its second such order in 2 weeks. This is the definition of a company hitting an inflection point. If you're managing an individual brokerage account or an intelligent portfolio, these are the types of contract win cycles you have to track. For the narrative-driven investor, the story of Ondas is often simplified down to drones. But to understand why the stock is holding the $9 level despite today's minor pullback, you have to look at the business model. They operate through two distinct but synergistic units. Ondas Networks provides their proprietary wireless broadband technology, the FullMAX platform that overcomes the limitations of legacy networks for things like railroads and utilities. Ondas Autonomous Systems provides the drones. By selling both the pipes and the hardware, they create a sticky, high-margin ecosystem. This is why their gross margins hit 53% in the last reported quarter. Compare that to the hardware-heavy margins of many other companies on your SoFi trading platform, and you'll see why analysts at Stifel recently initiated coverage with a buy rating and a $13 price target. Now, for those who are newer to the stock, let's go over what they actually do. Based in Boston, Ondas has spent over $275 million in capital to develop its technology over the last decade. They aren't a startup, they are a mature tech firm that is finally seeing the market catch up to its capabilities. Their revenue in Q3 2025 was $10.1 million, a six-fold increase year over year. Think about that for a second. While most companies are happy with 10% or 20% growth, Ondas is growing by 600%. The expectation for the market was for a loss of 4 cents per share, but the reality was a beat on both the top and bottom lines. This is the pattern of a breakout year. Past performance hasn't always been this rosy. For years, Ondas was a laggard, trading under $2 for much of 2024. The company had to endure several dilutive capital raises to stay afloat while their technology was being validated by government agencies. This history is why some older reports on investing sites still label the stock as high risk. But the reality of 2025 is that the risk-to-reward ratio has shifted, with nearly $70 million in cash on the balance sheet at a massive $380 million backlog. The liquidity risk that used to haunt this ticker is largely gone. Comment below how many shares of Ondas you currently hold, or if you think the drone industry is getting too crowded for smaller players. Looking toward the future, the outlook is tied to several critical catalysts. The first is the January 2026 initial purchase order from the Border Protection contract. This will be the concrete data point the market needs to see how the revenue will scale. Second is the ongoing migration of the North American Railroad communications to the 900 MHz band, where Ondas has a dominant position. If Ondas can successfully execute on these two fronts, the current 2028 revenue estimates of $150 million could actually prove to be conservative. The risk, of course, is execution. Being a prime contractor for the government is a huge responsibility that involves managing complex subcontractor relationships and strict delivery timelines. In terms of market psychology, we are currently seeing a tension between those who want to lock in profits after a 400% run and those who see this as the beginning of a multi-year growth cycle. If you are using Fidelity Wealth Management or have an individual brokerage account with a long-term focus, you have to weigh these daily swings against the structural growth of the drone-as-a-service market, which is projected to reach $550 billion by 2034. Ondas is positioned at the very front of that wave. When you look at the volatility on your Robinhood stock trading screen, remember that high beta stocks like this often pull back to their 50-day moving average before making the next leg up. To summarize the central insights for today, December 23rd, Ondas is showing a classic calm before the storm trading pattern. The intraday price of $9.14 is a slight retreat, but the context is a company that is fundamentally transformed from a speculative wireless firm into a leading defense prime contractor. We have discussed the massive institutional buying, the regulatory moat created by their BVLOS approvals, and the explosive 600% revenue growth that caught the market off guard. The contrast between the overextended expectation and the inflection point reality is what will define the stock's trajectory heading into 2026. Whether you are active in online investing through SoFi Invest or managing a sophisticated interactive broker's account, the key level to watch is $10. A definitive break above that level would likely trigger another wave of institutional buying as the stock moves into a new valuation bracket. The reality of Ondas is that it is no longer the penny stock it was a year ago. It is a serious contender in the national security space. The depth of their integration into critical infrastructure, from railroads to international airports, provides a level of stability that most drone startups can only dream of. Maintain your focus on the contract execution in Q1 of next year, and don't let the daily 1% fluctuations distract you from the massive structural shift happening under the surface of this ticker.